Hi everyone, today we are going to talk about Creditaccess Grameen Limited, which is a microfinance institution. Microfinance NBFCs have truly come of age. They were unimpacted by the liquidity crisis that engulfed the NBFC sector since September 2018. The reason for this was also very not surprising because they were best placed in terms of liquidity as compared to many other NBFCs. So while most NBFCs were busy raising funds or managing liquidity, microfinance sector focused on growth, and the same was evident from the loan portfolio growth of microfinance institutions, which registered a growth of 44% as it end December 2018. Precisely because of this growth in MFI, we scouted for an idea in the microfinance space and zeroed down on Creditaccess Grameen. So let's look at the key highlights of Creditaccess Grameen. Creditaccess Grameen is the third largest microfinance institution in the country in terms of its loan book size as at end FY18. It is a unique financial services play operating at the heart of the rural India, providing finance to the unserved masses at the bottom of the socio-economic pyramid. It is an established player with over 19 years in operations. It primarily lends through JLG mechanism. Now, JLG is a joint liability group mechanism, and because of this type of lending, the credit risk is slightly lesser as compared to the normal credit business. In terms of its rural presence, it has significant presence because 82% of its customers are from rural areas. Despite slowing down during the demonetization period in FY17, Creditaccess Grameen has reported a strong loan book growth in the last 4 years, that is from FY14 to FY18, and its loan book grew by almost 44% compounded annual growth rate. Even in the current financial year, its loan book has grown by around 49% as at end December, and it is around 6,000 crores as of end December, and management has guided that it will be around 7,300 to 7,500 crore by FY19 end. Now this is a very good loan book growth. In terms of return ratios also, the company has reported very good numbers. Despite growing at such a high growth, its return ratios are far superior because its return on asset is around 6% as of in Q3 FY19, and this was mainly because of high margins, or lower operating expenses, and very low credit cost. The ROE, that is return on equity for the company, was depressed at around 17% in Q3, and this was mainly because of excess equity or capital which was raised in Q2. However, as the company continues to grow its loan book and levers capital, we anticipate a significant improvement in the return on equity. So what's the outlook on the stock? While microfinance sector is a relatively riskier asset segment because of the weaker borrower profile, few in the industry has a track record as that of Creditaccess Grameen. The stock is currently trading at 2.4 times FY20 book. Now this is reasonable considering the high earnings growth potential. On a relative basis, the valuation looks slightly premium when you compare it to the small finance banks like Equitas and Ujjivan, which are also operating in the micro lending space. However, given the low cost structures, high return potential, and the possibility of getting converted or being acquired by a bank, makes a pure play for a microfinance institution like Creditaccess a worthy consideration and should support its high valuation. Long-term investors who are looking to buy a quality business operating at the bottom of the pyramid should buy this stock. That's it from our side. Thanks. For more details and updates, log on to moneycontrol.com.